Morning, Steve here in Chicago with the morning grain comments. Overnight, kind of a mixed trade. We've got beans down anywhere from 5 to 6 cents, corn and wheat unchanged. I think there was an unexpected rain event that occurred across some of the dry areas of southern Argentina overnight, which caused some selling in the beans. As far as the forecast is concerned for both Brazil and Argentina, it does look a little questionable, with Argentina over the next 6 to 10 days looking for mostly normal to below rains and normal to above temps. That could begin to raise some concern about corn during pollination and also dry the soils out for the soybeans. We also noted that in Brazil, we saw some rains across the central and northern areas. That could delay harvest there. So even though we're a little bit lower, some people think we might find some support from that. Outside markets, some people will say that the newly elected president had a bad weekend. There was some protests, and there was also some issues about confirmation of some of his cabinet members and just some overall feeling about how fast he can see some of the changes that the markets are already looking for. Tax reform, stimulus, and a little bit of concern about some of the trade issues. So we're seeing some weakness in the dollar, we're seeing some weakness in crude oil, and we're seeing some issues in the interest rate markets that could cause a little bit of concern about the stock market and where it's going to go. And everything's kind of tied together. It was interesting that someone has said that the CFTC has mentioned that 82% of all commodity volume that's traded in all markets are traded by non-humans. So all of this comes together that things might be linked together. As far as the U.S. is concerned, we're kind of waiting for maybe some new news on demand. Maybe we're waiting for new news out of the USDA and what 17 and 18 looks like in the Feb Outlook meeting. But the average guess for this year's U.S. soybean carryout is somewhere between 395 and 465 million bushels. The USDA is 420. That's a pretty big spread for prices. For next year, the range is as low as 300 and as high as 550. And so that again puts a lot of emphasis on not only how many acres U.S. farmers plant, but what is the demand out of China that there's some trade issues. In the corn, it's more closer to the USDA's 2,355 million bushels for this year and near 2.2 billion bushels for next year. The key there is if farmers lower corn acres and we have a trend yield, corn could get a little bit tighter. And I think that's one of the reasons why you're seeing corn supported over the last week or so. Wheat, just everybody's looking for a carryout about 1 billion bushels, not a lot of change. Again, despite the lower acres, there's plenty of wheat in the world, and we're looking at crop conditions to be the key for prices. Outside markets a little weaker. Grains are focusing on South American weather and demand, and would expect to see kind of a choppy trade this week as we get a better feel for what's going on in Washington, South America, and money flow. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.